This is an update and technical analysis on Anheuser-Busch InBev, a company of the consumer defensive sector in beverages and brewers, here off the 7-day interval. Well, we had some headlines come through amongst a key pivotal inflection point in the technical space, where we had a recent portrayal of an individual in an advertisement that has stirred significant controversy. It just came with a diverse reaction from the public. While the intent behind the advertisement was aimed at promoting diversity, there is a potential risk of unintended consequences. I mean, it could precipitate a reduction in sales and a downturn trend in the company's stock price here. Not just because of the technicals, we're talking about a compounding issue. The fact that the company is saddled with a substantial amount of debt, surpassing a staggering $100 billion. Consequently, this renders the company highly levered, making vulnerable to economic fluctuations. Should the prevailing economic climate witness a rise in even more rates, or we're supposed to hike again in May, or an economic recession, the company may face challenges in meeting its debt obligations, impeding its ability to maintain the stock price as well. This precarious situation really underscores the potential negative impacts of the company's substantial debt burden on its overall financial performance and market valuation as well. Oh, whole lot to throw at you, but that's where some of the fundamental analysis kicks in. Here we are, though. We're at a key pivotal inflection point where we have been rejected pretty significantly here. We'd like to take away the lines. The only thing I like about this chart is the potential inverse head and shoulder classic looking bottom here, off split of the neckline off this primary reactionary high downtrend line. So bull traders, dip buyers, they want to see a solid 7-day candle close right above this key inflection point, where you have the 7-day 200 moving average hovering up above as well. So, but again, short traders, they want to see a complete continuous downward trend down to the 6106 for a 3.4% drop, down to the 57-day moving average for a 8% drop, down to 53.88 for a 14% crash, down to $50 for a 21% crash there. So big key inflection point, and it has been rejected pretty impulsively there right off that key inflection point. I'm going to zoom in here on the daily interval, where we've put in a huge divergent high with negative and bearish divergences really encountered amongst 3 out of the 4 indicators down below here, with a confirmed crossover in the moving average convergence on a potential revisit to its testing its zero line there. And here we are, 786 fibs retracement, key inflection point, especially 618 fibs retracement as in the first target, where you have the 50-day moving average hovering in down below, which will coincide with double support. If we take that out, we have a solid daily candle close below. I believe that will initiate a sell signal, in my opinion, even though it'll be pretty decently oversold conditions at that point. But that would be underlying next move, in my opinion, down to the 618 fibs retracement. And really what's so unique about that is we have the 5804 price support here, which coincides with the 7-day interval here. I'll zoom in here, add that key inflection point, 5804, and there's 5804 right amongst the 618 fibs retracement amongst the daily interval. I'll call it a coincidence or call it an extra check mark for just a big inflection point where we have a gap support, 7-day support, 618 fibs retracement. That's the mother of all levels, in my opinion, as far as the stock goes. So if we even get a move down here, bull traders, dip buyers, especially if you're a long-term investor, I know they have a ton of other beers out there. They own a huge chunk of the beer market. So again, if you're a long-term investor, you like these risky stocks with a high burden of debt, these are your key averages. These are your key average down positions to start averaging down. And but we take that out, that's going to put in some pretty significant damage as far as zero lines being breached, momentum indicator damage, something like that, where we have this could even be a potential classic head and shoulder, where we'll have that maybe a back test, and we'll build up maybe a right shoulder here, and the 618 fibs retracement, call it 7-day support there, gap support, will be the neckline to that head and shoulder top. And if we take that out, I would only suspect a pretty quick and swift move down to the 200-day moving average, coinciding with the 50% fibs retracement, call it 55, 51 price support there, and that would be a pretty big inflection point as well. So just key average down, especially for long-term investors. These are your key averaging down position sizes, and then ultimately we start taking that out, it's going to start to get pretty ugly there. And then the 236 fibs retracement, call it a gap support as well, 236 49.79 price support. We take that out, and I believe there will be a complete renewal trial in really in a huge competition As far as the zero fibs retracement here, I'll call it 44.33 price support. You will see undoubtedly, in my opinion, we take out that 236 fibs, and I would only expect further selling and maybe a challenging of those COVID crash lows there. That would be a big inflection point in my opinion, because you just you've got so many key inflection point reactionary lows down here that hadn't been seen since October of 2022, and just the air pocket, nothing but an air pocket below these two key pivotal inflection points off these 236 fibs and zero fibs retracements. Oh, you take these out, and I believe short sellers will smell blood.